Welcome back to the Wall Street Podcast. Today we're diving into a Morgan Stanley research report on Geely Automobile Holdings. It's titled Asia Pacific Eyeing a Stronger 2H Raise PT to HK $24, and it came out August 15th, 2025. That PT, price target raise, definitely signals some analyst confidence.
Yes, it's a detailed look at Geely's prospects for the second half of 2025. It covers their volume goals, how they plan to grow overseas, and expectations for better profitability. Gives a picture of a company really pushing for growth and efficiency.
Okay, let's break down those key findings. Geely's aiming for a full-year volume of 3 million units. That's ambitious. Driven by 4 new models this year, right? Including the Galaxy M9 and ZR9X.
Exactly. And we saw some immediate traction. The Galaxy A7, for example, pulled in over 30,000 orders in just its first week.
A strong signal from the market, definitely.
And alongside that domestic push, they're looking overseas, projecting a 30% half-on-half sales increase in the second half. They're targeting 420,000 units total for the year, internationally.
So, expanding into new markets, introducing models like the Galaxy E5, Zeekr R7X.
Precisely. It shows a serious global commitment.
And financially, it seems the strategy is starting to bear fruit. Net profit per vehicle is set to rise pretty significantly, from RMB 4,700 in the first half up to maybe RMB 5,200, even RMB 5,500 in the second half.
That's the projection. It's quite a jump.
What's behind that improvement?
Well, several things. Lower depreciation per unit as volumes scale up. Also, significant savings in the supply chain through joint sourcing. And a better product mix more premium models from Zeekr and Galaxy gaining ground.
Right. Higher margin vehicles.
Exactly. And speaking of Zeekr, their tech group actually reported its first GAAP operating income in Q2, about RMB 285 million. It's not just selling cars, it's becoming profitable.
A key validation for that premium brand strategy.
Definitely reduces reliance on the core brand.
Yeah. Okay, so we see the targets. Let's talk strategy on the ground. How is Geely positioning itself domestically with these new cars? What's fueling that market share growth?
Well, they've nearly doubled their volume share in China's passenger vehicle market since 2023. That shows their strategic shift is working, particularly in NEVs, new energy vehicles. The Galaxy brand, for instance, is making real inroads in that crucial RMB 100, 200K price bracket. These new launches are really designed to boost the average selling price sequentially and enhance the premium feel for both Galaxy and Zeekr.
Okay, so strong domestic footing plus that overseas push. How does that translate into the financial forecasts and ultimately that higher price target?
Right. Well, that projected 30% half-on-half overseas growth is a major factor. You combine that with better margins from cost savings, better operating leverage. It all supports Morgan Stanley upgrading their EPS forecast for 2025 through 2027.
And that leads to the HK $24 target.
Yes, rolling forward their DCF, their discounted cash flow valuation, to 2026. The market sees a clearer path to better earnings.
Of course, forecasts always come with risks. What assumptions underpin that HK $24 target, and what could potentially derail it?
The target uses that upgraded earnings outlook and the DCF model, assuming an 11.2% WACC, weighted average cost of capital, and 3% terminal growth.
Standard metrics.
Pretty standard, yes. On the upside, if they push premiumization further with Galaxy and Lynk & Co., margins could expand even more, especially if competition eases up.
And the downsides?
The big ones are, well, intensified domestic competition, always a factor in China, and potentially more global trade protectionism. Think new EU tariffs, things like that, impacting overseas sales.
Right, makes sense. Let's shift focus slightly. Beyond investors, what's the impact here for the general public, for, the average car buyer?
Well, one really interesting point in the report is Geely's plan for methanol-powered hybrids. They project these could have operating costs per kilometer similar to, or maybe even better than, EVs.
That could be significant.
It really could. It offers a different kind of cost-effective option, especially where charging isn't widespread yet, or for people looking beyond gasoline.
More choice for consumers.
Exactly. And more broadly, Geely's aggressive global expansion means more competition worldwide. For you, the consumer, that could eventually mean more vehicle choices, potentially different pricing dynamics, more innovation as established players respond.
So this Morgan Stanley report on Geely really underscores some key shifts happening in the global auto industry. Innovation, strategic growth. It's reshaping the landscape.
Absolutely. Understanding these dynamics gives us valuable insight into where mobility is headed. Certainly gives us plenty to think about regarding the future of consumer choice and the competitive auto market.